Hey, it's Andrew here, Tried and True Home Loans, Rise Realty. I'm a mortgage lender and licensed real estate agent. Today, what I want to talk about is first-time homebuyer programs, which are also known as down payment assistance programs. One of the big misconceptions is that these are only for first-time homebuyers, and that's not true at all anymore. These probably originated as first-time homebuyer programs, but things have changed a lot. One of the other things that came with these originally were a lot of income restrictions, and those do exist, but there are programs out there that have addressed those issues. So let's just go into a couple of things. One of the things about first-time homebuyer programs is that they're not as cheap as everyone assumes. Yes, these loan programs have basically solved a specific problem of helping the home buyer come up with the minimum down payment, which is either 3% for a conventional or 3.5% for an FHA loan. But these loan programs do come with costs, just like every other loan. And they don't solve that problem. So for me being a lender, I talk with a lot of first-time home buyers and buyers looking to use down payment assistance. And while we solve the problem of the down payment, oftentimes they still don't have any savings to go towards the closing costs, which can be 2 or 3% of the purchase price. So let's break this down. Currently, most national program is based around a FHA loan, which needs a 3.5% down payment. There are some down payment assistance loans that are conventional that would have a 3% down payment. The down payment assistance comes in 3 different flavors. One is a forgivable grant. The grant will be a small loan for the down payment amount, and it'll just sit somewhere. You'll generally have to live in the property for anywhere from 3 to 5 years. And if you make all your payments on time, they basically forgive the whole loan. It gets wiped away from your debt altogether. It just sort of disappears, and you'll get documentation on that. The second type of assistance would be a silent second. Now, this works a little different. A silent second does need to be repaid. However, it doesn't accrue interest, and it only has to be paid off under 2 circumstances. One, you do a refinance, basically closing out this loan and refinancing to a new product, or if you sell the house. Both situations will have the 3.5% second added into the principal amount that you owe to close out your property. It's essentially like getting free money as well. It's definitely a good option. The third option is a repayable second. You would get a first mortgage, and then you will get a second mortgage for the amount of the down payment. And this does come with interest accrued as well as a short term. And generally, the interest on the repayable second is slightly higher than whatever rate you qualified for your first mortgage. All right, so now I want to talk about closing costs with these programs. While the down payment assistance program is designed to get you money for the down payment, it doesn't cover all the costs. And closing costs for a traditional home purchase tend to be anywhere from, let's say, 2 to 5%, depending on how your loan and closing costs are all set up. A down payment assistance loan is generally on the higher side because all down payment assistance loans tend to require that the buyer pay the lender fees and commissions for the loan as a closing cost. So if you were buying a house and the typical closing cost would be like title, escrow, recording fees, appraisal, different things that are part of every loan, let's say that might be 3% and you were getting a par level rate, which means the cost to you is $0 to get that rate. At that point, you would just pay that, say, 3% of all those closing costs and you'd be done. But with a DPA loan, you're getting the loan, you're qualifying for the first, then you're getting the second however you choose to get it, and that's covering your down payment, but you still have closing costs. And you need to pay the commission, which can be anywhere from 1% to 3%, to the lender that you're working with. If the actual third-party fees are 3%, and now you also have to pay 3% to a lender that you're working with, your total closing cost might be 6%. That gets expensive. However, I have a solution for this. State of the end, and we'll talk about it. Another thing about DPA loans is that loan is designed to cover the down payment. But more modern loans that have come out, and the way that they're building these now is more common and more general. Now these loans are essentially used just as a loan, as cash. Instead of it needing to go directly towards the down payment, it can go towards the down payment and closing costs. So you just kind of dump it into the cash to close, which is generally your closing costs and your down payment all wrapped into one amount. So these down payment assistance loans, the seconds, can be used towards any part of the cash to close. And that's a newer feature to the down payment assistance programs, but it doesn't change the overall cost. Basically, it just makes it easier to sort out the finances on the loan. One of the things that comes up a lot when you're talking with realtors or with a lender about down payment assistance loans or programs is that they often will suggest that you might be able to purchase with zero money out of pocket. And when they say that, they are referring to the ideas behind this program is while the government is helping you, the lender might charge a lower commission, the realtor might possibly credit you back money, and you might get some type of a credit from the seller, which could be part of your closing costs. It could also be money that was given to you for negotiations for some type of repair that the house might need. But it all gets dumped into kind of an escrow account, and it all tends to be basically paid towards the cash to close. But when you hear that these are very inexpensive, or you could potentially buy with zero out of pocket, the person that's sharing that information with you is essentially believing that they are probably going to get credits. You might even be able to get gift funds as well. And a lot of times using gift funds will cover everything, and the borrower themselves could end up paying zero out of pocket because they got credits and gift funds, and they use the down payment assistance loan to cover everything. But those fees don't go away. They're paid by somebody. And that does need to be negotiated in the purchase of the real estate or in the negotiations with your lender as you're working through this. Okay, let's talk about terms for these loans. So typically these loans are based off of FHA loans, that 3.5% down payment type of loan, or a 3% conventional. They're going to follow the conforming guidelines, which means that the county loan limits are going to come into play, and they're all going to meet those guidelines. Sometimes a program could have slightly different guidelines or requirements, and that is why you're going to want to work with a lender that looks at your situation and figures out what type of down payment assistance program would be the best for you. Sometimes these programs are what bring a client to me, and they don't necessarily need the money. If they don't actually need it, it's better to just move away from that type of loan. The terms of the loan will be traditional, be almost always a 30-year fixed mortgage. The second, if you go with a repayable, will usually be a 10-year term. So it'll be a much smaller payment, but it will generally come with a slightly higher rate than whatever you qualified for on your first. So if you're getting a 6.5% interest rate on your first mortgage, it would be very common to see that second be at 7.5 or 8.5%. And that payment will be also calculated into your DTI because you do have to pay it. So it becomes a bill. But again, this is when we look at everything as a program for you, specifically to fit your scenario and your needs. Ideally, we would love to give everyone the forgivable second and have that 3.5% just waived altogether because you're going to live in the house for 3 to 5 years, no big deal. But that forgivable amount of money does get reflected in the rate of that first mortgage. A repayable second down payment assistance programs tends to be the cheapest, especially if you're just looking at these on paper. This one would probably have the lowest rate, would probably have the lowest payment. Even when you combine the two, it would still have the best program. So again, we look at this as a package or as a whole program that fits your personal needs. Down payment assistance programs will have income limits, meaning you can only earn up to a certain amount. We see them generally around 80% of the AMI, the area median income. They basically set these up because the lender that created that specific program, their goal was to help lower income families get into their first home. So they create these income limits so they're not loaning the money to everybody, but they're loaning the money to somebody who needs it. So here in California, probably the most common, well-known down payment assistance or first-time homebuyer program is the CalHFA loan. Everything that I've seen in the last 4 or 5 years has been modeled off of that program, and each time they try and fix a little bit of the problem. CalHFA underwrites all their own product. They actually fund the first loan as well as the second. When you're running a CalHFA loan, you get underwritten by the lender you're working with, and then they send your documents to the lender that's actually essentially writing the check. They do a second run through and underwrite the loan to make sure that it meets the guidelines, more of the program guidelines for the person, the income limits, the credit scores, the DTIs. They get a little bit more specific about what they're looking at. But the challenge that comes with that is it tends to be a longer time frame. So CalHFA loans tend to be 45 to 60 days to get closed. And that's always been an issue. The last 2 or 3 years, we've seen a lot of programs come out, and I've been closing these things as fast as 22, 23 days. I'm almost always closing them a few days early. And even when I do CalHFA, what I found with CalHFA is while there is extra time, they're always pretty quick or even slightly earlier from the time frame they give us when they do their first and second look at the loan, because they also balance it at the end. So the time frames have come down, so they fixed that. We saw that kind of give these programs a bad rap because sellers want to get out of escrow and close as quick as possible. They're hoping for 30, 20 days, and you're like, hey, I've got an offer. It's going to be 60 days. It's a down payment assistance. All these things together, they can cause a seller to get nervous about the ability for us to close a loan. And there is no reason that you wouldn't close a loan just like any other loan, as long as you're working with a qualified lender who understands all the steps that are taken and has educated you on how to prepare and be prepared to act as quick as possible to keep our loan and our escrow moving forward on time. So here's the thing. If you decide that you need down payment assistance, we should talk. The newest program that I'm excited about, and if you've watched any of my other videos about first-time home buyer or down payment assistance, you know I'm a huge fan of the California Dream for All. I've been fortunate enough to have clients use that for the last 2 years. And that's an amazing program because it actually allows for up to 20% of assistance. That loan is gone for now. It comes back once a year, and it's incredibly hard to get into the lottery. If you get into it and the timing is right, it's a great program. The programs that I'm talking about now, they run year round. The benefits of what I have to offer that I'm super excited about is I have a program that now allows for what we call lender pay commission. So at the beginning, I said down payment assistance loan closing costs tend to be 1% to 2% higher because you have to pay the lender's commission. This new program is allowing us to get paid by the lender at the same rate. So we have either choice. This ideally saves you money. It could reflect in the rate a little bit, but the rate isn't going to be higher than the current averages that you would qualify for. That's the important thing to understand. The second thing this new DPA program has that I'm excited about is if you choose the repayable second, which, like I said, tends to be the best for overall costs of the whole loan, they have the terms go up to 15 years versus only 10. So you're now dividing that smaller 3.5% loan by 60 more payments. And that dramatically changes your payment amount, helping buy slightly higher or just simply have a lower monthly payment overall. It helps you because it just lowers the overall cost of the loan altogether. So if you have interest in learning more about DPA programs, how they would work with you, if you qualify, if it makes the most sense at all, please reach out to me. I love to help you. The other thing that is tied to DPA programs or first-time homebuyer programs that is going to affect everybody, any buyer wanting to buy a house, is the new NAR changes and the way that commissions are working. So because I am a licensed lender, I can offer you down payment assistance programs, but I can also represent you as your buyer's agent. And because when I bundle my two services together for one client, I can dramatically lower the fees that you're going to pay for commissions and fees on your loan. If you're interested in getting good representation for negotiating the purchase of your property, as well as finding the best down payment or any type of home loan for your next home purchase, you should reach out to me. I'd love to talk to you and figure out if it makes sense for us to work together. I do believe I'll have programs that will work for you and that we will be able to come up with a way to save you thousands of dollars in fees and commissions. My contact information will be in the description. Click on that, shoot me an email. We'll set up a time.